It is our time, right? And it's so close to July 4th. So, one of the kid was challenging me because he knows I'm a little tax person. So he's like, not everything related to tax. And I said, absolutely not. He goes, firework is not related to tax. And I'm like, you just give me a topic. Okay, fireworks. It has a lot to do with tax. That is our today's topic. And you challenge me, I am going to challenge your thinking and to see this firework thing from consumer standpoint and versus business owner standpoint, the one who set up the tent and selling fireworks and eagerly waiting for you to go there and buy, right? And what you see on the screen right now, it is the partner. The partners in our firm are on our website. So if you go onto our website, you actually would tell which partner is there. And so you can see the screen right here shows you that it goes all the way down to the partner. And it's me, Dr. Hao, Dan Kim, and the Song, and the Kwan. So I don't know what happened to the screen. It's not moving. That's okay. Let's just go about our webinars right now, and we will look at our webinar. So let me click that, see whether that would show up properly with me sharing it, right? We have to share that with you. So now I'm sharing screen with you. It came through just fine. Just like I said, fireworks, it has a lot to do with tax. And obviously, every time we go out to buy things and we have taxes, so that's sales tax, right? Folks, in our life, the most typical, the most often seen taxes are the sales tax. Excess tax is kind of on top of sales tax. It's imposed on certain things, but not for everything. So those are state taxes, right? The state local taxes. Then, of course, you have income tax that the federal government want a piece. Then the state government, some state government don't want a piece. Some state government want it. So particularly for the states that we're in, like our community CPA, we're in California, we're in Iowa, we're in Minnesota. So those three states, the state government all charges the income tax, right? But if you go to Texas, Houston, which is our newest branch, the state government don't charge that. Don't charge state income tax. So let's go back to our fireworks and why it has so much to do with taxes. So before I do that, and let me just kind of introduce you, right? Introduce you to our firm. I am the CEO and the managing partner of Community CPA. My name is Ying Sa, and I have been on the same job, the same thing I'm doing, maybe only increasing by capacities and the complexities, but I'm just really doing the same thing and doing the same work for the past 27 years. I know this slide is a little older, but it marks my age when you look at the years I practice. And of course, a couple of things I always make people know. We have books on internet, right? I wrote 2 books already on internet. One is this 8 a.m. That is how to start a business. I wrote another book is 10 a.m. Having appointment with Ying at 10 a.m. And that one is growing your business. Then you have a third book coming out now. I am writing it. It's 2 p.m. That is to expand your business. So I truly believe that business is a process, right? And you want to be in business. And so a lot of people are drawn into business just because appear to be free, appear to be easy. Even in a CPA firm like our firm, we only deal with successful businesses, right? Businesses are successful, so they come over here and they do all kind of things with us. They plan the future, but we often also see business going the other direction. But imagine all of these businesses outside there, they may not even coming into CPA firm to get a service. So a lot of business are really didn't even get into the 2 p.m. stage, but they're starting and they're dying. And so in our webinar, all of our webinar, what we're trying to do is to really encourage the heart, which I mean is to have you learn about the business. And if you did not born into a family with your mom and dad with a bunch of money and to give you business talks every day on the dinner table and to give you money to go to good school, and if you're not those kids, you grow up and you're a new immigrant to a business land. So this is the webinar place. This is the place to bring you into business world without you failing, without you trying. And you just listen to us, learn what we teach you, and the accumulation of that knowledge will bring out a wonderful business out of you. Of course, when you become a wonderful business, and don't forget to come to us, okay? So because we welcome new clients. And with that said, this is old slides. So it says a new book coming out. This is 10 a.m. That already out. So now the new book coming out is the 2 p.m. No responsibility disclaimer is so important. And it is almost like this dose of information is like calming you down, right? It's like, oh, I'm going to tell you a lot of good things, really, really good things. Use as your discretion. I'm just like, come on, why do you have to put this slice here? Put this slice here is not to take me away from my responsibility. It's actually to put you in place to take charge of your life. You want to learn, but you want to use the knowledge accordingly. Not everything you see on internet is right information. Not everybody you meet is your lifesaver. And not all the knowledges you learn today is going to be useful to you. So hopefully, majority of people who come to our webinars would find us very useful and very helpful and very sincere. With that said, I will go to my slice of happy 4th of July. It's such a, I can spend days to tell you the wonderful experience that as an immigrant myself, how I enjoyed life in United States of America, how the freedom, the democracy, everything that entails American spirit is shined through everything we do. So fireworks, same thing. And the firework has a lot to do with taxes because taxes is one of the reasons why the country is great. Without someone paying taxes, we don't have the road, we don't have the White House, and we can't even give the glamorous to the First Lady and have the person dress up like a queen, and that's all need tax dollars, okay? So with that said, we know why taxes is important. Let's look at the taxes from the consumer standpoint related to fireworks. You might pay tax. You might pay additional tax called excess tax on fireworks. What is that? Excess tax is imposed by state and the local government on the sales price of the fireworks. In this case, I'm just talking about fireworks. And that range is a lot. It's 5% to 12%. Pennsylvania has 12%. Okay? Some other state like Indiana has 5%. And the good news is, if you live in Midwest, and we are the caucus state, right? So we do not charge additional excess tax on fireworks. So by fireworks in the state that does not have excess tax, and those are Iowa, Minnesota, Nebraska. I didn't check all the states, but for the Midwest, I checked it. There's no. And with Iowa, you may be wondering, oh, how much of fireworks that each state, like say Iowa, would sell in a year. There is no real year-to-year data, but I found a data under the U.S. Census related to taxable fireworks sale in Iowa in 2018. Guess what? How much? 60 million. 60 million. That's almost like $1 million on sales tax they collected. Even though Iowa don't charge you excess tax, it actually charges sales tax, right? So when you buy fireworks, you pay sales tax. So that's a revenue. That's a revenue the state government has. But some of the state, don't remember which state, but it's not the state that we have a branch, we have client. And they actually allow the local government, the city, to impose sales tax on the fireworks. So, you may say that, why? Why is that? Fireworks, why do they do that? Do they lack of July 4th spirit? No. Firework is hazard. Generally speaking, the fireworks can cause fires easily. So it is like, I wouldn't compare that to cigarette, but it is a thing that has a high risk. So now that thinking, that idea of fireworks is high risk, but fireworks sells. We buy a lot of fireworks every year around this time. So let's look at from business owner standpoint. If you have a job at Wells Fargo and you just want to start up some small businesses, every year you got so much PTO, and you literally are, don't know how to spend your vacation. If that's the case for you, and you know that you may want to do a little part-time business, then if you want to do that, and you want to make sure that the business is retaining the risk on its own, and it doesn't affect your full-time job, and you're just going to take your PTO to do a couple weeks selling, and is that possible for fireworks business? Yes, it is possible. Let's take a look at in business of selling fireworks. What do you need to know? If you are in business of selling fireworks, and you are seasonal business, right? I say seasonal because you can't sell, 24/7, 365 days. There is a period for you to sell the fireworks, so seasonal. And you often see them in tent, right? Outside, somewhere on the road. It can be profitable. And because you are seasonal, so your operating is really shrunk into short time. You ordering and you sell and you wrap up the tent, it's done. So with the short time, the labor can be very controlled. You maybe hire yourself, your spouse, and your kids, and even your mother-in-law, which never want to talk to you, but during the fireworks time, and she'll talk to you because she can come over to help you, right? So those are the things, and you can control the expense, so you will make profit. There's special consideration on tax accounting side for seasonal business, and let's continue to talk. So this is a typical business you would set up for fireworks, right? So you set up this beautiful firework tent and you're willing to sell. And this, in fact, is my heavy slide I want to put in here. We're going to stay on here for a while. And so this one tells you all the consideration you need to have when you want to get into a firework business venture. And then you keep your full-time job, because fireworks business venture not going to require you to be quit your $100,000 a year job, right? It is part-time and very limited. You want to keep your brain busy with your full-time job, otherwise you'll be retarded if you don't use it. So our brain is like that. You just have to keep on working, okay? And you can take time to prepare your part-time small business because you know where to order, and you can plan that when to start ordering, how they're going to arrive, and it's only open for short time. So the amount of time you can open, you can look at the last piece of the slides. You see that if you have a permanent establishment, you can open from June 1st to July 8th for firework sale, and then from December to January, the end of it, for December 10th and January 3rd, this whole Christmas season, you can have that open. And then if you have a temporary structure, then you're only allowed to sell from June 13th to July 8th. So it's not very long time. And someone look at this, goes, oh yeah, I have enough PTOs to do this, because that's only needed 3 weeks, right? So you can make extra money for that, and you can also test around your ability, whether you're really made for business. I mean, seriously, not everyone is made for business. I don't think I am made for business, but I do believe that I am made to be a teacher. So I always, ever since I was young, I felt like teaching is something I really enjoy doing. I would be a good teacher, and only because my father is a professor, so back home in China, professors don't make money. So my dad told me that don't be a teacher because you can't support your family, figure something else to do. That's what I was told. So I did not go on teaching career. So I went into accounting, economy, thinking that I'll be buddies with big business people and so, do well for whatever I do. But I never really thought I would open up a CPA firm. Obviously, if you know our story, we didn't really open because we have a business plan. We did open because there's so much need out there, people coming to us, wanting us to do that. So I want you to skip the 3 red item I have on the slide. One is the inventory management. The other one is tax benefit, and you are seasonal business. I want to come back to here, but I want to give you 3 important things down there related to firework business. If you are in that business, you need an annual license fee, okay? Don't forget to apply for that with the state. The range from different state is different fund, different money, $100 to $1,000, just depends on what type of things you're going to set up. Is that a tent, or is that in the permanent building, and the percentage of floor space you're going to occupy? So those are considered into the license fee. Then you also are required, because you are doing fireworks sale, you are required for commercial liability insurance. They always tell you, the licensing department will tell you that you need to insure for $1 million per occurrence, then $2 million aggregated, which means that in those 3 weeks, you can only have 3 incidents, okay? You can't be blowing up the tent 3 times. That would not work. So these are the things you need to know. And your temporary structure are the one that in the tent, and just like the nice picture I showed you here, but they're only allowed to operate from June 13 to July 8. So just so you know. And the licensed retailer and the community group, for example, say Yonkers, if they want to sell fireworks, and because they have this licensed retailing space already, but they still has a limitation. So that license need to be to be obtained, and they also need to operate in certain time frame. So these are just practical firework businesses that you need to know. But I want to, as I am accountant, so I want to zoom into these very key things related to taxes. Remember, I told you that it has a lot to do with taxes. So you may ask that, okay, I have a job at Wells Fargo and I make $100,000 a year on salary, and I have so much PTO because I worked there for 20 some years already. And I can use my PTO, my vacation time, to work on the fireworks business. Instead of going on the cruise, spending money, I'm just gonna be packing the camper and building a tent, start selling fireworks in a spot and having vacation with the family in that way. All right, so if you think of that, number one you want to think is to limit your business endeavor into a entity. So we always recommend high-risk endeavors to be in the C corporation. So you go into a structure and making sure that all of your problem is retained inside of your entity. Of course, you have the insurance, you have the entity, so you're double assured and you should be okay. Now, related to that taxes, because you set up an entity, you're going to file tax, right? So you want to treat your inventory management system. So a lot of time you go, I'm so small, I don't need an inventory system. All these big, huge inventory systems like Inflow, NetSuite, I don't need them. And how do I implement first in, first out, or last in, first out? Those are typical inventory management software, right? Inventory management method. The software are the things I mentioned to you. There is the most popular inventory management software that I know. I know doesn't mean is what most popular out there. I know only because my 12,000 clients, they're manufacturers, and they use those ones. So I know those ones. There are Inflows, Fishbowl, and NetSuite. So all of these inventory management system, it would give you a place where you will set up first in, first out, or last in, first out kind of method. Then it will go just like natural. You don't have to worry. You just need to put in the purchase date and time, price, and you are done. But in your small business setting, when you are not using those systems, you're using your son's computer with Excel to handle this. This is where you need to understand what is first in, first out. First in, first out just means that if you bought the inventory in January, and you bought inventory in February, you bought inventory in March. Same inventory, January was $1, February increased to $2, March increased to $3. In April, you are selling it. And when you sell this inventory, because you just bought in March, so you kind of know that the inventory is $3 already, so you know to sell it for $4. So if first in, first out, that means you will sell the $1 minus your $4 will minus $1, right? You bought in January. That's the first time. That's the first in inventory. So you made $3 profit. But if I use last in, first out, so my $4 I sold, my last in inventory, how much dollar did I have spent? $3, right? So my profit is what? Is $1. So you want to pay less tax. So why are you not thinking of how you do your inventory, right? So in the fireworks business, it's so important. You're going to do last in, first out, because you're always going to have a little bit left over from last year. I know when you sell it, you try to sell last year's first, right? You want to bring them to the front of the shelf. You want to draw people's attention so they can buy last year's inventory. But in reality, if you order the same last year inventory and your price probably went up, so you want to do last in, first out. So a little bit of talk on inventory. Then on the tax side of benefit, and you will say that, oh, what's the benefit for tax side? You know what? I mean, the tax benefit to us just means that you are paying the right amount of taxes, right? You don't pay more, you don't pay less, and you pay what you deserve to pay. And in this case, if you have a firework business, you sell it for 3 weeks. So you got $500,000 sales here. And you have inventory that you ordered, the one that didn't really get sold, and you want to utilize inventory write-off. You want to utilize your accounting method, whether you count for cash basis or accrual basis, and you want to utilize all the tax credits out there. And then maybe you have a tax credit. It's called work opportunity tax credit. Work opportunity tax credit, especially giving to the student who works in the summer. Then you may be also looking at other tax benefit. So, I'm just giving you an example. And right now, and I can think of is the work opportunity tax credit, but there's a whole bunch more out there. So tax benefit is something that you're going to work with your tax preparer really closely because you have that already. You have that business already, so you know exactly how you made it and whether you made it. But the accounting method, inventory management system method, and your tax credit application, these make huge difference for people. And sometimes it's revenue recognition. Do you really make that revenue, right? But in fireworks business, it probably don't have a lot of issue related to revenue recognition, but sometimes client get paid, but that payment is not income because it's not being created yet. They pay advance. For example, if you have a firework lover who come over to you, they just love your place. They said that we're gonna come back next year. We give you $500. Next year we come back and we're gonna keep that as a credit. We're gonna buy things next year. I know that normally don't happen, but pretend it happened. Then your $500, is that an income or is that your liability? It's actually your liability because the person didn't pick up the fireworks. And they just give you the $500 and you supposedly to give them the fireworks. So it's unearned revenue, right? All right. So now let's talk about your seasonal business. What's the big deal, Ying? I filed my taxes in December. December finish, I filed them on April 15. My fireworks, it's a LLC, is under Schedule C, and I don't know what you mean by fiscal year. And hear me. Fiscal year happens when you make concentrated revenue in less than 2 months. In your case, you are. And when you have a seasonal business, do you want to close the book as soon as you sold the fireworks? Or you want to close the book when the money you made had properly spent, the next round of money making is going to start? Of course, it's latter, right? So let's say the fireworks business finishes at the August 1st. July, the end of July, we're done with fireworks. So what really should happen, and your fiscal year, then you made all the money on July, in the month of July. And if we cut off your year on July, and you would end up paying more taxes, am I right? Because the money you made, you hasn't even had time to spend yet. So you want to give yourself time to spend the money that you got from the fireworks. So typically in fireworks business, a lot of people keep year end as December because the big money maker is in the middle of the year. So they felt like they have already zeroed out their income. They already spend it if they need to spend. If there's any bill to pay, it's already paid, so it's not too worried about it. So that's when they say that, okay, December I close the year. That it just happened to be December is a good time, right? But if you are in the business only selling things in December, then obviously December is not a good time. You should close your year in November, right? And you may say that, well, I never know how to do these year changes. IRS has regulations and the forms to use to change your seasonal business. Even though we're talking about fireworks here today, but it's really meant for all the seasonal work, seasonal business to take advantage of this tax benefit, right? On the fiscal year, on what year you finish. So with that said, I think I give you a little bit different taste of fireworks, right? Other than they're just crazy and fun. Now, fireworks is related to tax a big deal from the user standpoint all the way to seller standpoint, and it's tax all around. Obviously, tax is part of our life. You can't escape it, and you need it. And if you are a person, manage your life properly. And I know you manage your tax filing properly too, because that's what part of life requires in this kind of economic setting, right? Everybody need to pay taxes. Remember the two things that we can't get away from. One is what? The other one is tax, right? All right. So have a great 4th of July, folks, with a sound effect, but it's not coming out of my computer. I'm just gonna make it with my mouth. Boom, and hiss and crack. It doesn't even sound like it. But it is fun enough that to put smile on your face. And July 4th, I wish you a very happy and a celebrating kind of July. And know that everything we have, it is because our policy and our economy is going the way it should go. Whether it's up and down, left and right, and it is always going properly as long as we cast our vote. All right. And our last slides is related to who you talk to. Catherine at communitycpa.com. Email her, tell her what you want to know, and we will bring that into the webinar. And our phone number, 515-288-3188. You should memorize that. Whenever you have issue, you call. We open on Saturday as well. And most of the professional firm closes on Saturday. We're people, professional plus workaholics. So you know why we are here. And I will see you again. And it's so nice to have you with